So if I do a relative valuation on this, if I do a relative valuation, this is where we are just now, right? And it's where we've been for obviously, pretty much over a month. We've had the same valuation for pretty much over a month. As we go to the left, you can see that we intersect this balance area here. Now, obviously, if we intersect that balance area, we need to find out where the balance area is. So it'd be realistic to put the balance area at that price there, which would suggest, according to the supply and demand of oil, it would suggest oil should be trading $70 a barrel, Alan. 70 at this stage. And that's obviously something that we're now looking at in terms of if we can get some short-term supply to come back in here, we may well see oil trading down towards the 70s on a macro scale basis, correct? So when we looked at it over here, we started to make that decision about the $80 a barrel. That's why we've got this big heavy area here, because obviously as the price was driving down in terms of the spreads here, I think this is where the conversation took place, Alan, if I'm not mistaken. Perhaps somebody remembers. I think the conversation was about here. It was about that $100 a barrel area, because what UBS came out and said was 125, and we says in Kazakhstan said 80. And when you looked at that there, you saw that driving down, and when you went for that intersection, you says, well, 80. And you obviously go past the previous one as well. And you can say, well, past the previous one, you're looking at perhaps a price area around about here, which is about $79 a barrel. $79 a barrel. So obviously that idea of $80 was founded on simply looking at the supply-demand line. So based on that analysis, we agreed entirely with what the Kazakhstani oil minister was saying on a macro scale basis. And since then, of course, the value has actually continued to tumble back off those areas, by $4 per spread, $4 per spread. So if it was 80, that puts you around about $76 a barrel. Puts you about $76 a barrel. But you can see that the actual baseline case would probably suggest around about $70 a barrel in terms of where we get to here. About $70 a barrel just now. So you're absolutely right. That conversation was had quite some time ago. And do you remember we said that UBS were at it? Do you remember that conversation? I think I had that conversation with Paul ages ago. And I said, I think UBS are at it. I think they're trapped on a buy trade and they're trying to get rid of their longs, because we had a valuation about $80. And, and UBS came out pretty much the very next day and says $125. And we're like, these guys are at it. They must be in a long position trying to desperately get rid of it, because they know fine well it's about $80 a barrel. And obviously they were able to get a little bit of action in that area just to hold on to that trade. And obviously they got absolutely whacked if they never got off the trade. But we said that we know UBS. Why? Because I used to work for them. I know exactly what their oil model would have been showing them. So we knew fine well that they were going to be putting out a little bit of a suggestion that we want higher oil prices, but they're absolutely wrong-sided, big style. And we said they are at it. I think that was exactly the words we used. UBS are at it. I'm not going to scroll through the last 5 months of tweets to try and find the guys. So, but the guys will tell you that for the new guys coming into the room, that was a conversation. That was a conversation that we did have live in this room. And you can see yet again those big macro calls, those big picture narratives. Absolutely, absolutely spot on.